Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. What a time period in terms of mortgage rates, especially as we talked about in a previous webcast, the effect on those mortgage rates on the mortgage-backed security portfolios of community banks have seen really gigantic drops. And if we want to look at this in terms of how much mortgage rates have moved over a period of time, is let's go and look at the highs and lows and the spread between different mortgage and mortgage-backed security prices. So if we want to go to the low on May 2nd, 2013 on 15-year mortgages, 2.64% was the low. Amazingly enough, on July 5th, we got up to a 368, a total of 104 basis point move in the 15-year mortgage. When we look at the 30-year mortgage, we hit a low of a 336, and now it's up to 4.64%, once again hitting a high on July 5th so far, which is a total change of 128 basis points. So a significant, when we shock investment portfolios up 100 basis points, effectively we've had that shock in here of mortgage rates really shooting up. Mortgage-backed securities having a larger effect. Once again, talking about mortgages really and mortgage-backed securities being somewhat of a bubble that burst in here, is that on 15-year mortgage MBS up 131 basis points. On the 15-year and the 30-year up 142. Now once again, when we look at the low on the securities, it goes all the way back to October of 2012 compared to July 5th, 2013. So we've had somewhat of a move up in here over a period of time. Let's look at May 15th, before Bernanke talked about tapering. Is the 15-year mortgage was at a 279. When we look at it from the standpoint of the 30-year, 365. Well, after the speech, moving up about 9 basis points to a 288 and up about 12 basis points to a 377. But after the Fed meeting, that basically moving up to a 311 and then a 401 on 30 years. And we can see after we had the impact in here of the overall employment number, etc., on July 15th, 3.5% and a 448 on 30-year mortgages. Also seeing similar moves up in terms of the overall securities also. So when we see this big move, we have to put it into some kind of context. Has it gone too far, some ask? Will it continue to head up even further? Well, that depends overall on the economy and if the Fed continues to be buying securities, which should have somewhat effect of bringing this down. Many fear that it could stall the mortgage market in here, that people might start stepping back, which would then also slow the overall economy, which could bring these rates back down again. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.